Back with closing trades right here on ET now. We're holding out flat as we speak, 24,590. So, conquering that 24,600 mark surely seems like a little bit of a challenge, but it's a much livelier, broader market. Can tell you that safely. Look at a Godrej Properties up a solid 4%. Hindustan Zinc holding higher by almost 5%. PNB Housing is looking very smart, about a 5% of an uptick coming in there. Sona Comstar, like we were just discussing, along with Jubilant Foods, are your big winners this afternoon. On the flip side, though, MCX BSE continued to be under pressure. Kalyan Jewellers is down 3%. Cummins is down another 2.5%. And NHPC, after its earnings, is down about over 2.5% on the futures as we speak right now. BSE, in fact, is quite actively traded. The stock is now lower by 96 points. 3,500 thereabouts is where the futures are currently trading. And then, yes, Cummins as well as the other active one, 2.5% lower on Cummins as we speak right now. Marico as well, 1.7% lower on the stock as we speak right now. But let's welcome on board Ajay Bagga and Shrikant Chauhan in on the discussion on the markets as well. Kunal, of course, is still with us. Ajay, Shrikant, hi, afternoon. Ajay, if I could start off with you. Impressive earnings so far, Ajay. Anything from within the mid and the small caps that's got your attention? Any sectoral trends that you're picking up? Where you think the next profit pool as well is getting generated?
Yeah, I think more we'll have to focus on domestic largely. High growth sectors which are addressing the domestic segment is where we should focus on. So auto, we saw blockbuster numbers. Auto is continuing. Consumer durables overall, that segment is looking good. Financials with the 18% credit growth, I think that's a very big pointer. Leading indicators are strong. The macros are strong, and credit growth as part of it is looking quite good. So I think financials will do well. The other themes that we are liking are defense and pharma. Defense, overall, a very top-down view, $2.7 trillion global expenditure growing very fast. Europe and Japan rearming, India modernizing very fast to catch up with China or at least have a deterrent to China. There are multiple drivers of defense, and we have made a good export thesis for our defense players as well, apart from our domestic consumption. Pharma are doing quite well and should continue despite the threats of Trump tariffs. We think that will be more of just crying wolf, and it will not materialize, but we'll take it when it comes. Overall, pharma looking good. And then I would say industrial. So capex revival is very much there. Government capex has been strong, but this credit growth is a pointer that private capex in certain segments is coming in strongly and can be expected over the next 6 months. IT, as I've been saying for last 3 months, I think that is being proven now. We saw the Palantir numbers last night in the US. The stock was up 29%. So the fifth part of the AI momentum play, where it is enterprise applications and enterprise is using AI. I think that's where our companies come in, and that's going to grow. We have seen the cloud service growth for the hyperscalers also. Our IT companies will ride off this, and you will see more and more order flows coming through as there's more geopolitical certainty comes in. You'll see more order flows, and I think IT is another bet that I would take now.
How would you play IT? I'm curious to know, Ajay. Hi, this is Harsha. Would you play through some of the mid-small cap names, or would you play through the larger ones?
No, you have to be very specific. So I would say both. There are, I can't name stocks because of compliance not being SEBI certified. But overall, if you look at IT, what you have to look at is who's getting the order flows, who have rejigged their models. This time, a few companies started reporting their AI segment revenues. So I would go with those because at least they are focusing in, and they obviously have something to show you that, so they are showing that. So it is across Harsh. There are some big players as well as there are specialized players who will do very well. What is being done is the highway has been put in, and it will continue. It's a 3 trillion expenditure across the world that's happening. It has been happening last 3 years, and it will happen for the next 2 years. Again, next year, the hyperscalers themselves will put in about $1.1 trillion into the segment. A lot of announcements in India also, both on the fab side as well as on the data center side. Our IT service companies will start getting benefit from this because as an enterprise, even if AI can write some part of the code, you're not going to trust that AI to do it for you. You will need some company to come in, and that company will be a mixture of agentic as well as actual employees. You might have seen the McKinsey Global Partner interview, where he said now we have 40,000 employees and 25,000 agents. This is our employee base. TCS Chandra also said the same, that there will come a time when we'll have more agents than employees. So that mixture will come in. And now what is happening is tokenization happened, AI happened. Now people are seeing, how do I get the cost down? NVIDIA, if you see between Blackwell and the Hoppers, Blackwell is 30x higher productivity, but you're not seeing that gain in the token prices. So that's where our IT will come in. That, okay, I am going to write queries, I'm going to write GUIs, which will make sure that your usage of AI is very cost effective, is very productive, and you're not repeating the same thing again and again. So you need somebody in the middle between the core AI, between the frontiers, between the agentics, and between the enterprise. You need somebody sitting there. That's where our IT is going to be sitting.
Okay, let me go across. Shrikant Chauhan also with us of Kotak Securities. Shrikant, let me come to you. First off, on the index, what's the index view?
Yeah, good afternoon, everyone. So while looking at the structure of the market, it is very clear that the market has crossed the level of 24,500, 600 after a period of almost 3 months. And now it is sustaining about the same. Also, if we consider the overall activity of the market of last 3 days, then in the broader market also, we are seeing a lot of momentum. So I am of the view that the market is heading for 25,000, 25,200 in the near term. And any dip, any correction will be an opportunity for traders as well as investors for entering into the market. So maybe 24,400, 24,300 going to act as major support for the market. But if there is a medium-term view, I am going to say if there is a view of at least next, let's say, 2-3 weeks, and not very, very short term, then one can even look for adding stocks at current levels. Metals, private banks, I think these are the spaces where we should look for taking some long bets because these stocks are still available at decent valuations.
Right. Okay, let's take a very quick break on that note. There are a lot of buzzing names. Look at a Shilpa Medicare, for instance. There's a huge spike in that stock. Record high numbers coming in this time around, and more importantly, their outlook on their licensing income, on what they have to say about CDMO, the API, as well as the biologics verticals. That's very, very interesting, and it's aiding that further push in the stock price, which is currently holding up by about 14% after a very, very sedate best part of today's trading session. The spike up has only come in post the numbers and the commentary. We'll analyze that and many other buzzing stocks, but after this very short break. Back with closing trades right here on ET Now. While the broader markets, of course, are abuzz, the Nifty is rather sedate. Names like Shilpa Medicare, which we just flagged off, they're, of course, holding out very well. Record high numbers coming in there, extremely strong results. And the outlook from the company going forward as well is extremely strong. We will, of course, get in our researcher and to flag off, what the the finer details from Shilpa Medicare and the commentary set out by the management are. But just take a look at the rest of the pack as well. Auto Angs, of course, are going very strong. Godrej Properties has had a strong reaction to its numbers. Hindustan Zinc, once again, you are seeing metals actually, take leap. Hindustan Zinc for the longest time has been a silver-related story. Silver has already moved up about 3% intraday, I think, and is on an upward trajectory. And you can see that reflect on a Hindustan Zinc right now. Look at a PNB Housing, Jubilant Foodworks, Sona Comstar. These are all your big winners in trade. Ajay, wanted to get your sense in on this metals rally after a fair amount of consolidation past few months. The move seems to be happening, and it's happening pretty much across the sectors. Do you think there are enough tailwinds in place for a more sustainable move from here?
The macro is strong. The global, if you look at it, we are seeing that metals are on an up move again. So overall, Indian companies will benefit from our own capex expenditure and the global tailwinds that are coming in. So both are helping metals. But I would still say, rather than the pure play commodities, maybe the industrials and especially within the infrastructure play, the power sector, you might be better off playing through that than the pure play commodities. This is a bounce and fundamentals are good. Overall, the macro will improve. So it will show up. Yesterday, I'll give you one data point, for example. Caterpillar numbers came in and the stock was up 5%. Now, Caterpillar used to be the first stock to report, 20, 25 years back. It would be the first stock coming in to report, and it would really be the US economy. It will tell us the global economy and the US economy, how it's doing. So much order flows because of data centers coming through. And they had such a fabulous guidance. The stock went up 5%. And that's not, it's an industrial stock. It gives like heavy machinery and stuff like that. And here you had a 5% jump as if it was an NVIDIA or an AI stock. So that's what's happening globally. But again, I would say rather than the commodity players, because that you have to be very careful which part of the cycle are you getting in. And the returns can be huge if you get it right, or it can be destructive. So more than that, I would say the power suppliers, the energy security companies, the renewables, and our industrials. I think that will be better. Those are the so-called appliers of those metal companies rather than playing the pure play metal.
Okay. I'm going to quickly switch focus to Shilpa Medicare as well as Whirlpool. Both of those numbers came in just less than an hour ago, and Snehi here with a breakdown of what those numbers seem to be suggesting. Snehi, you tell me that Whirlpool has recovered from the lows. Just give us the perspective on the numbers and take it away.
Absolutely. So let's start by decoding the earnings that we've got recently from two companies, Whirlpool as well as Shilpa Medicare. Swinging moves coming in, contrasting moves on both sides, because remember when the first reaction to Whirlpool's numbers was not very positive by the street. The stock was lower by 4% but has since recovered. The revenue has come in at 2,582 crore rupees, which is an uptick of 11.5%, much below the estimate of 2,700 crores. EBITDA at 120 crore is also much below the estimate of about 200 crores. It's down 38.5%. Net profit is down 34%, and EBITDA margin is also moderated by close to 380 bips at 4.6%. Now, the street was estimating a weak set of numbers, but this is even weaker than what the street was estimating. The street was estimating a weak set on the back of hike in raw material costs and a poor performance from the Elica, which is the kitchenware, as well as the refrigeration segment. There has been a management rejig for the Elica segment too, and that's on Whirlpool. Shifting focus to the other side, then you've got a very sharp uptick on Shilpa Medicare post a very strong set of Q1 earnings. It's a beat across all fronts: revenue, EBITDA, PAT and margin. Revenue has come in at 466 crores, which is an uptick of 45%. PAT at 101 crores has more than doubled on a year-on-year basis. The EBITDA is higher by about 48%, and EBITDA margins have also expanded by 76 bips at 29.3% compared to 28.5%. Remember, the EBITDA margin estimate was just 27.8%, so looking good over there. This is their highest ever quarterly revenue and EBITDA, and the management has said that they are strengthening biologics pipeline and improve utilization digitalization is expected to further drive revenue and margin improvement. So good numbers, good outlook, and that's why Shilpa Medicare is doing well, but Whirlpool is under pressure.
Okay, good spot coming in on Shilpa Medicare, Whirlpool under pressure. Shrikant, wanted to get your sense in on the charts for a Shilpa Medicare. I mean, pharmaceuticals, of course, has had a brilliant move, even all through the troubled March month. But anywhere where you still find tradable opportunities?
So specifically for Shilpa Medicare, if we consider the technical pattern of the same, then today it has broken the important level at 653, 655 and crossed almost all its important level. So while looking at the setup, I am of the view that the stock is having further legs. It can even move up to 850 because now it is completely into blue sky zone territory, and we can even see the levels of 850. But from the pharma space, based on the overall activity, I think now we should focus more on Laurus Lab because there we are seeing consistent upward activity, and it is like taking some time, consolidates, and then again it moves into the new territory. So Laurus Lab is something on which we need to focus. We also like Glenmark Pharma and Aurobindo Pharma. I think Aurobindo Pharma is going to announce its number today. So maybe because of that, the stock may show some sideways sort of activity. But there also we are bullish, and there also we are expecting at least 1770 to 1800 sort of levels based on its technical pattern.
Okay, and I wonder how you look at the insurance pack, Ajay, because you've got LIC, OFS, and the green shoe option exercised. But when you're looking at valuations at 0.6, 0.7 times embedded value versus even some of the larger ones which haven't done much, frankly, I mean, maybe not larger ones, but the private sector ones, the better valued ones, if I can call it that. And those have moved sideways, and despite that they trade at maybe 2 times, 2.5 times embedded value, despite that 5, 6, 7 year of sideways movement. How should one reconcile this, and how do you look at LIC now?
LIC, this OFS was more to bring down the government holding and as per the SEBI norms. So it's more a tactical maneuver by Deepam to get some funding in for the government and also meet LIC's obligations. But like SBI on the banking side, LIC is on the insurance side. It's India basically. So just the scale is so massive. And if you, when I was in one of the subsidiaries of one of the public sector banks, and we had met LIC chairman that time, Mr. Bajpai used to be chairman. And he was saying, even if I just revalue the real estate I'm holding around the country, do you think what my balance sheet would be? So it's a very different scale-wise, and also in terms of, like SBI is banker to every Indian. This is the insurer to whichever Indian buys life insurance. The name itself is life insurance. So that way, branding-wise, the salience-wise, very well run company. The greatest, I would say, some of the best investment committees I've seen over my career have come out of LIC. In terms of the company itself, you mentioned the valuation is lower than some of the private sector companies, the more you can say the new gen companies. But I think there is no comparison that way. Insurance overall, if you look at, it's still a very sunrise sector. The penetration is so low. The good news is government has brought in some amount of social insurance, social security insurance kind to cover people. But still, I'm saying this is a very sunrise sector in India. It will keep growing. So life as well as general will do well. And now, these last 15 years, the capitalization, all that has happened on the private sector side. Most of them are profitable. They will continue to grow. So as a sector, it remains a long-term buy. And clearly, LIC, I can't say a buy or sell, but it's practically the insurer of India. So that way, the scale is just mind-blowing as far as India goes.
And the penetration still very much at a nascent stage. Berger Paints, those numbers look quite okay. The decorative and automotive segments have managed to lead the growth for them this quarter. That's what the management is indicating. You can see that huge spike up come in on Berger post the numbers. 551 is where that stock is right now. Profit has seen an uptick of about 28 odd percent or over that. The top line growth has been about 12%. And want to see what else in terms of their segmental performance has been and what they have to say about the raw material costs. That's going to be quite critical. The EBITDA margins, though, at 16.9% versus a comparable of 16.5%. Ajay, throw some light on whether you feel that the raw material cost adjustment, at least a larger chunk of it, is behind us when it comes to paint companies?
Yeah, paint, there were two issues, Aisha. One is the input costs going up sharply. So that has had an impact on margin. And second, hyper competition come. So when a very well-funded competitor comes into a large sector like this, they can upend the pricing. And that's what the paint segment has been going through. Two large manufacturing behemoths, they started their paint divisions, and they have challenged the pricing. You see the advertisements, the 10%, 20% extra or discounts that are happening. But the industry leaders have held up. They have held up a big portion of their share. And now I think a large portion of that input cost issue has been worked out. So hopefully this Iran issue disruption stabilizes. We get better prices overall for all the industries which are downstream to crude oil. And these companies will do well. It's a play on the consumption theme of India. I think, and these companies are very much embedded companies with massive distribution. And if you even look at their servicing, where they have moved on to give different services to customers, I think they are par excellence, and they can beat any global company on margins, on efficiency, on capital efficiency. So all those are working for the sector. Hyper competition and the spike in input costs were the two challenges. Competition is very much there; it will stay. So those that will impact the profit margins ultimately, and some amount of market share will go. But there is enough and more growth overall in India to absorb all this.
Shrikant, let me come to you with regard to a couple of names which are absolute buzzers in trade today. Something like an Ola Electric perked up 7.5 odd percent. Hindustan Copper is also the other one, 8.5% higher. How are you looking at the charts on these two?
So for Ola Electrics, I can say that the stock is like highly volatile. But the base part is that since the stock had started rallying from the levels of 22, it has started forming higher top, higher bottom series. And recently the stock has completed its corrective pattern. So based on that, again, the stock can move to the next levels of maybe 47, 48 in the near future. At this level also, there is downside looks limited, and upside is very clearly up to 48, 47 sort of level. So it's a buy at current levels if there is a positional sort of view. For Hindustan Copper, there also we are seeing good amount of activity in today's date, and we can expect further more activity. But then for that, we need some positional view because already the stock has moved up by 8%. And now there is expectations that dollar index may come down. Bond yield can also fall to the levels of maybe 4.55, 4.50. I think if these are the things, then in that case, we can see some more upward activity for Hindustan Copper as well as Hindustan Zinc. But at this level, if there is a positional view, then one should look for adding this stock with a target of 565 on the higher side. And on the downside, the support is around 520 levels.
Okay, on that note, let's take a very quick break. When we come back, the last lap of today's trading session.
top of the world with Times Network. And you're watching ET Now.
In association with the all-new YONO, power to every Indian.
बेस्ट हरा बोर्ड दिखाना
सबसे डिपेंडेबल सेंचुरी HDF प्रीमियम प्लस
ट्रायल लूंगा
श्योर
वाटर रेजिस्टेंट
है स्ट्रॉन्ग है हाई डेंसिटी वुड फाइबर स्ट्रक्चर एडवांस जर्मन एडहेसिव बॉन्डिंग सॉलिड डिफेंस
ट्रायल में पास
सेंचुरी के 40 सालों का भरोसा हरे बोर्ड का असली बॉस सेंचुरी HDF प्रीमियम प्लस
SBI जनरल हेल्थ इंश्योरेंस SBI का भरोसा 18,000 प्लस हॉस्पिटल्स का नेटवर्क मिनटों में प्री ऑथराइजेशन और ट्रांसपेरेंट क्लेम प्रोसेस
SBI जनरल इंश्योरेंस चुनिए भरोसा अपनों सा।
आत्मनिर्भर उत्तर प्रदेश की MSME ताकत हुनर पुराना औजार नए। उत्तर प्रदेश में लोगों का हुनर सदियों पुराना है। कुम्हार के हाथों की कला हो या बढ़ई लोहार और दर्जी का काम, अब इस पारंपरिक हुनर को आधुनिक प्रशिक्षण और नए औजारों की ताकत मिल रही है।
वन डिस्ट्रिक्ट वन प्रोडक्ट की ये योजना इसने उत्तर प्रदेश में परिवर्तन किया है। यहाँ के युवाओं को नौकरी और रोजगार के साथ जोड़ा।
ODOP कौशल उन्नयन एवं टूल किट योजना से 1,61,473 लाभार्थियों को प्रशिक्षण और टूल किट मिली है। वहीं विश्वकर्मा श्रम सम्मान योजना में 4,43,412 कारीगरों को प्रशिक्षण और आधुनिक टूल किट दी गई।
गवर्नमेंट ने जब तक थोड़ा खिलौने पे जोर दिया है तो इसका रुझान लोगों के प्रति बहुत तगड़ा बढ़ा हुआ है। सरकार बहुत सारे लोन दिए हुए हैं।
हुनर पुराना औजार नए, यही है MSME की नई ताकत।
Dear bestie, how can I thank you? They say the truest friendships cannot be manufactured. They simply unfold naturally. How true that is for us, bestie. Love from Bestie Collection. Natural diamond bracelets for you and your bestie.
At 7 p.m., it's not just news. It's clarity. It's perspective. It's what moves you forward. Monday, where ideas become businesses with Sumita Career, Startup Central. Tuesday, where brands tell their real story with Shivani Bharat, Brandverse. Wednesday, Beyond the Headlines with Sajid Mangat, Deep Dive. Thursday, Securing What Matters Most with Anurag Shah, Insurance Mantra. And Friday, the questions that demand answers with Aisha Faridi, The Interview. 5 days, 5 powerful voices, 1 destination. ET Now at 7. Your evenings will never be the same.
Welcome back, and we continue trying to track the buzzers, but of course cash market has closed. FNO is obviously open to 340. The closing auction session is on. Very quickly, Shrikant, I just want to take a few names and take your view, especially from QSR, because we've seen some very sharp moves in this space. Devyani is up 4.25% today. You've got that move coming in on Jubilant Foodworks as well, 4.5% higher. Some sharp moves we've seen in recent weeks on a Mrs. Bector's, a Restaurant Brands India. How is this Restaurant Brands Asia, I beg your pardon? How is this one, how is this entire space looking, Shrikant?
Yeah, I think when I was going through with these stocks, it was like completely unexpected that these stocks can explode like this. But they have crossed their important levels, and now most of these stocks are very close to their important resistance level. So I am of the view that instead of taking any specific bet at these levels, it is better to stay away. In fact, one should look for taking some profit on this particular stocks. In that particular, the entire list, I would like to go with Vector Food. There I am seeing some renewed buying interest, and the stock is having furthermore upside based on technicals. Here, if we consider the current immediate targets for Vector Food, then close to 240, 250 sort of levels we can see in the near future. Currently, the stock is forming some consolidation formation, and after completing that consolidation, we can see some upward breakout. So there we are bullish, but for Jubilant, Westlife, I think most of these stocks have already rallied to their extreme levels.
Right, okay. That's the take coming in on the market right now. In the meantime, just looking at the buzzers and look at that move on Hindustan Zinc, which has happened in just the last few minutes of the cash market close. It spiked up almost about 6%. So that, of course, has done very well. JSW Steel has been the other one, which has also looked good. In fact, Shrikant, I want you to come on the charts of Hindustan Zinc and whether it seems like this spurt is sustainable.
I think after a very long time, these stocks have started rallying after forming multiple base at important support levels. So while looking at the chart of Hindustan Zinc or Hindustan Copper, the picture is more or less similar. But for Hindustan Zinc specifically, I think it has added advantage of the overall performance of precious metals. And today we saw a good amount of activity in silver after very long time. And based on that also, we can see some further more activity. Currently, if we consider the technical pattern of Hindustan Zinc, then it is forming triangle sort of formation. The stock can again move towards the levels of maybe 650, 660 in the near future. I'm not expecting this stock to cross all the levels so easily, but yes, it can consolidate furthermore. And from here, at least 10% sort of activity, or at least 5% sort of activity is not ruled out from current levels.
Okay. All right. How do you look at QSR, Ajay, Wanda, and would consumption, would you play consumption through QSR?
No. I think that story has been studied quite a lot, and we have seen it play out. But I would say there are better options right now, both on valuations as well as growth. I would say maybe quick commerce is a theme that is more liked by institutional players. We are seeing a lot of ramp up on the quick commerce bet. So maybe that. QSR, I think there is a fair bit of consolidation also happening. And I would say it is a theme that has played out to a large portion. And again, I would say you have better options on the durable side as well as on the quick commerce side.
Okay. And some of the new IPOs, Ajay, like a Manipal, would those interest you at all?
See, again, I can't give a buy or sell, but you look at the valuations are pretty steep. But overall, if you see within healthcare, one of the 6 verticals is hospitals and nursing homes. We are still very undersupplied, and well-run companies are showing great return on capital. So that is how we have to play it. Today listing was good. Overall, look at the valuation. And I think the good news is a lot of the debt is getting retired. So with these inflow of the IPO proceeds. So that's a positive. But more than that, I would say the segment is very much a sunrise segment. It's a good segment to invest in. Hospitals and well-run hospital chains are doing well, will continue to do well. There's a huge need, and medical tourism can become a very big driver again, given what happens in Europe or US in terms of waiting times, in terms of cost. If we can get that done, we have excellent doctors and excellent facilities. We see a lot of Middle East and then even from poorer countries, a lot of medical tourism coming into India. That can also be a driver, but our own capacity utilization is so huge and the need is so large. And again, as health insurance deepens, the affordability will go up. Again, there will be beneficiaries. So multiple triggers, Harsh, for this segment overall.
Well, some con call highlights coming in from Bharti. The management is now addressing the media and the investor fraternity. They've talked about Airtel Money preparing now for a London listing in the second half of 2026. They believe a 12% market share of the data center business is currently low for them. Looking at reimagining the process with AI to try and improve productivity, of course. Nextra will require funding, is what they're saying, to decide the invest mode over time. Majority capex is now channeled toward the transport infrastructure business for Bharti. And they've talked about a consolidated net debt to EBITDA, which is currently at 0.7 times. And they do see significant long-term opportunity in Africa, increasing the stake in the Africa business to now 79%. The Africa business numbers, of course, came in just a few days back. They've talked about an addition of 3.3 million customers in the mobile service segment with an ARPU of 264. And of course, Bharti's numbers, as we know, the one key monitorable for any telecom company, the ARPU numbers definitely have impressed. While Bharti, of course, after being in quiet consolidation for the past 3 odd months, has finally now inching closer to that 2000 mark. And I think it touched it also intraday today. About 2020 thereabouts is what Bharti did perk up to. Shrikant, what's the read-through, though, on the charts for Bharti from you?
For Bharti, I think the stock is it's correcting from the highs. After the news, I think it opened to its to its resistance level, and now around support levels around 1930 or 1950 sort of levels. Certainly, it's a buy. It is into again means broadly the stock is into uptrend. Short-term correction is happening. After correcting to the important support levels, again the stock can move towards the next level, and eventually we are plotting the levels of 2200, 2250 sort of targets for the stock in the near future. So it's a buy at on dips.
Okay, Shrikant, what do you make of the moves at close? And now, of course, we'll have the last 10 minutes of the session. What are you making of the moves now on the index?
So I think, say, like up to 315, this market is for retailers, and after 315 to 330, it is for institutions, mutual funds, ETFs, who participates heavily in these markets. And based on their overall demand and supply, the price gets finalized. That's my overall view. I am of the view that the way today the market recovered from the lows, and overall there was like the broader participation in the market. I'm expecting this market to move somewhere close to 24,000, 650, 675 sort of levels in the near future. But any correction, I'm seeing that as an opportunity for short-term as well as medium-term traders to create some long positions in this market.
You know, some movers, of course, as we sit on, and you've got the likes of an HCL Tech, even a TCS, for that matter, Apollo Hospitals. They're some of the big movers of the day on the negative side. Shriram Finance up 3.25%. That's your top gainer, along with Grasim and JSW Steel. Kunal, start of the last 10 minutes, how are you seeing the market and the moves?
Yeah, it's again, I think the third consecutive day where you've seen that slight aberration in terms of the jump on the cash closing on the index. I think we're seeing a difference of, again, positive almost 80-100 points on the index so far. And on the bank Nifty, I think we're seeing a positive move of almost 100-120 odd points on a relative basis, from the 315 time. So more or less on a very similar lines. But the only interesting data point which I was tracking in the mid-session today was a drop in India VIX. That has come back to 12 or just a shade below that 12 mark. This could be a big factor for the markets going forward, because as and how the market keeps on moving up higher, or the index tries to adjust itself with this new system of cash closing, we may probably be at a point where the lower the VIX it is, the higher the markets can sustain this kind of an up move and keep on getting stronger by the day.
Ajay, I wonder what your view is on with everything happening with regard to the change in closing mechanism.
So SEBI has thought this out, and what I am getting is that they're not willing to change this. So this will continue. They're looking to deepen the participation. As Shrikant said very rightly, the institutions are participating. I would suggest that the retailers stay out, especially on expiry day. Please cut your position early. Don't wait for this to take place. It is a big change. But SEBI is convinced that this brings us to international levels. So you can't fight the regulator. You have to go ahead and be compliant. I think this will stay, and these kind of moves will happen. So the best thing the retail investor, as Shrikant said, 315 is the cut of the market for the retailer. Get out by 215. Don't keep positions which are intraday. Towards the end. It's the third day in a row that we have seen a surge towards the end. So that matching is happening in a very opaque manner between institutions. We don't know who's doing what. And SEBI is very clear they're not going to change this. So best to then change your style and keep your trading positions out of the market towards the end, or if you are okay to hold them, these are longer positions, then by all means, but don't trade at this time, because this price discovery is really coming as a shock.